Is the Bitcoin cycle top in? Bulls and bears clashing as 2024 winds down. Hey guys, it's Keith Allen. Been a minute. Hope you guys had a great holiday. I spent some time with family. Was fantastic. And now spending some time back in charts, trying to figure out where things are headed as the year winds down. Is this just simply a byproduct of year-end profit taking? Or maybe we're seeing the development of a deeper correction, or as some might be speculating, some are speculating actually that the cycle top is in. I think there's a lot to consider before we can make a claim like that. I mean, where I stand is really quite simple. I just think it's too early to make that call, and the reason is very simple. Despite the current bearish sentiment in the charts, and make no mistake, the charts look ugly. The technical structure still looks good. It's intact, and the fundamentals still as solid as they've been. So I think we need to see things develop further before we can make a claim that the top is in. Now, I have heard that from some people that I respect, but I've also heard a lot of different perspectives. I'll be honest with you, I go with my own perspective, and I encourage you to do the same. I'm going to share some data and insight with you, and you interpret that as you wish. You got to do what's right for you, but for me, I'm sticking to my plan at this point, and I think that that's a sound strategy. But as always, you got to do what works for you. Everybody's got a different approach to this. So let's go ahead and climb in. Before we do so, of course, if you haven't done so yet, do me a favor and smash those buttons. Hit that like button. Hit the subscribe button so you don't miss any of these, because we're going to continue to do these live streams through 2025 and beyond. And of course, if you'd like to share a comment, live comments are open on YouTube. So by all means, I love engaging with you guys. Keep those comments coming. If you've got questions, if you've got insights you want to share, I'd love to hear from you. So without further ado, let's go ahead and climb in, and we'll start here on the candle chart, because we have seen some interesting price action here this past week, and really since Christmas. And I know there were a lot of high hopes that we might see things really jump up. Christmas, like get that Christmas gift. And historically, Christmas Day has been a low volume day, and it was a low volume day as well here. But we had over the past week, we had back-to-back trend precognition signals pointing down after rejection from the 21-day moving average. We then got a third signal out of the A1 algo down here. The arrows are A2 plus trend precognition, and this is a different algorithm for trend precognition down here. And you can see, we're still trending down. However, this A1 slope line is coming off of its trajectory a little bit, which means maybe the downward momentum is starting to dial back a little bit. But again, too early to tell. This is daily time frame here. What I like here is that we're, for the moment anyways, seeing a bounce from this structure. I've had this in place for quite some time, at least, for over a month, because we did have some consolidation here. When you recall, election day, we saw price just rocket up from November 5th, right? And we were looking for consolidation levels. And I want to point these out to you because we're going to revisit these here in a second. We had brief consolidation periods here at this, 76K level. We had a little bit here at this about 86.6 level, and that topped out here around the 91.6 level, which is precisely where we're seeing for the moment, and I mean barely seeing a bounce from here for the moment. Something else I don't particularly like in this chart is that the 21 and the 50-day moving averages are on the trajectory for a death cross. That's not good. It really speaks to the downtrend that we've seen here since topping here on December 17th. Does that date have any significance to you? Well, if you've watched the stream, it might. As you may recall, let's see if I have this chart still up. I think I do. As you may recall, I had pointed out to you a pattern that I had noticed over time here around that December 17th date. And this has happened since, as long as I've been in the game here back in 2017. We've seen some significant macro moves on December 17th. Most of them have been trend reversals. Most of them have been exactly on the 17th, 2022. It was the 16th, but nonetheless, what we're seeing develop at the moment is appears to be a rejection from that all-time high, which we hit on, yep, you guessed it, December 16th, December 17th was that date. So there you go. And since then, we've seen a breakdown through the 21-day and the 50-day moving averages here on the daily. The weeklies, of course, a bit more important to me in the higher time frames. So in terms of downside potential, you see the 21-week moving average is right there around that 76, 77K level. Could we hit that? Somebody just asked in our community. I put a poll out whether folks thought we would see a bounce from, the year-end bounce, right? So this is the last push here before the end of the year. Potentially, we could see a bounce from here. This 91 range, 91.6 is where I had my line. 80, this 86 level, 86.6 technically is where I have my line, or maybe lower down in this 76K range, which is a deep correction. But mind you, that we have been waiting for a deep correction for a long time. And I have I've illustrated this many times for you in the past. If you're new to the stream, I'm just going to give you a quick run through that, where we have had deep corrections in bull markets. Okay. And I'm talking 20%, 30%, 40%, 50, 60% corrections in bull markets. Yes, it can happen. This one was the COVID crash. So that one's a bit of an anomaly to me. So I don't even count that. But if you look just to the prior bull market, which we had a mid-cycle top, and then we had I think I have a magnet tool. There we go. We had the mid-cycle top up here around 65K, and then we had a pullback to the tune of 56% before climbing back up into a new all-time high. And that was a pretty big move from that correction. Okay, so this could certainly, absolutely, positively happen again, right? We could certainly be there. Now, so we've looked at some bearish signs and signals, and there's no shortage of them. But some of the bullish things to keep in mind. Number one, here's the macro trend line. Okay, since the FTX crash. This obviously still well intact. It would take a move down to 55K where we had, prior consolidation here, had that double bottom here. That would be, that would be nasty for a lot of people. That would be, in my opinion, really strong foundational support, right? You can see we started here back in 2022, 2023. We retested here before we really kicked off this rally. This entire bull run that we've been enjoying here. So that's a possibility. I'm not saying it's a high probability, but it is a possibility. Okay. It's about as low as we can go and still say that this market is still intact. Below that, of course, we have these prior levels, which I just shared with you on different time frames. We do like, obviously, would like to see things stay above that 2021 top. I do want to see a yearly close above that 2021 top for sure. If we look at different time frames, and of course, this volatility, lots of things happening here. Yes, there's year-end profit taking. Yesterday we had a weekly close. We've got a monthly close and an annual close monthly, quarterly, and annual close coming up here in a couple of days. So those are all things to consider. In terms of where the monthly candle sits, we would need to stay above. Where did we close? Where did we close last year at? We closed at 42, 42 and change. Obviously, that's not coming into play at the moment. On a 6-month candle, we would be looking at the 6-month candle closed at 62.6K. I don't think that's a factor here. On the quarterly, last quarter we closed at also 63 and change. So I think that things certainly stay intact up here above that 2021 top at the moment, and maybe the monthly, right? Maybe the battle is around that monthly close, which was 96,441 last month. Okay, currently we're obviously in red territory. Could we reclaim that before the end of the year? Absolutely. Could we go lower down to anywhere in this range? Absolutely. Wild west of crypto, all of those scenarios are still in play, in my opinion. In terms of looking for new signals here, at the end of each of these time frames, we certainly will do that, right? And especially in these higher time frames, these signals tend to play out very, very well. So we will be looking for a new signal, whether it is we could see a top signal at the end of this monthly close. We could see a signal come in here. Likewise, we could see an extension. If there's a top signal, I would look down here to the A1 and also notice if we have a change in this A1 slope line, this orange line here, which is really a live indicator. It moves in real time, similarly to how an RSI will move. So I'm going to look to see if this changes trajectory, right? Does it move up? Does it move down? Does it move flat? What's happening here? And we'll look at that across different time frames to see, gain some insight as to what price might be doing. You can see that we did come off of that downward momentum, and while this uptick in momentum here doesn't necessarily mean that price is moving up, but it just means that the strength of the bearish move is losing a bit of strength here at the moment. Okay, so and if this holds, that would be a big deal. So we talked about big corrections and where those could take us here. So let's map some of those out here on a grand scale so that we can get a feel for what's possible in this scenario, right? So so far we haven't really seen that deep correction that we're looking for. I said 20 to 50, 60%, I think is certainly within the realm of possibilities. As it sits right now, we are just at about 15%. 20% move would take us down to the bottom of that channel, that 86.6 range. And then going deeper into that 76 range would take us down a 30% move. That would be solid to me. And I'll tell you what is interesting to me about this level. If I cruise over to the CME chart, we have a CME gap, 77.9 to 80.6. Okay, so 77.9, that's obviously a bit north of my 76 target, but that's within the realm of possibilities. So I would not rule that out. When we were pushing up higher and higher and higher, a lot of people were saying, oh, maybe this happens next year. Well, it could, but it can also happen tomorrow. So don't rule anything out. Just be prepared, be prepared for these deeper corrections to play out, but also know that, if you're in this for the long haul, all of these bids were filled, right? There's hundreds of millions in bid liquidity here, as you see on fire charts. This is not retail placing, $21 million buy walls. That's institutional money. So when we see this happening, there's interest in buying at these levels, and they are laddered down. And some of those ladders have actually moved up because they don't think the price is going to go down as far. But the fact that there are people, and likely institutions buying hundreds of millions at these levels is an indication that their sentiment, the price is going to after this correction, move back up uh, in the weeks, months, and years to come. Of course, we have a new administration coming in on April the 19th or 20th is Inauguration Day. And so lots of fundamental hope for the crypto market around that administration coming in as well. Let's see. Comments are open. Anthony Reese chiming in. Most would lose their mind at something with a 7 handle on it. Yeah. Oh, I agree. I agree 100%. But if you're prepared for it and you are and you have conviction that price will rebound and that the bull market is not over, then well, you stick to your game. If you are day trading, obviously you don't want to ride it down to a 76K level from here. So those obviously are things to keep in mind as you move forward. So let's zoom out a little bit here and see if we can gain some perspective as to what's happening in terms of liquidity and order flow dynamics. And as you can see, we have not got a great deal. I'm going to zoom out even further, right? We've got, our biggest concentration really in the near range above 90K. We have a bit more down here in this 88K level. But in terms of down at that 86K level, there's really not a lot there. Okay, this doesn't extend that low. All right, so we have, it doesn't necessarily look like much because everything's not bright white, but everything can't be bright white. All right. There's technically really only one thing is bright white, but I'm using some filtering here to help us see some of the nuance in the chart. Let's go out even further. Let's go to the 3-year chart. And here we can see really how deep that bid ladder goes and what is above. And at the moment, you can see that there is a nice stack of ask liquidity up to 120K and likely higher here, but this is, for our purposes, this is all we can see right now in our range. Another 82 million at that 110K level, another 120 million at the 100K level. And we have a nice ladder of bid liquidity down here. I like this depth. It's good. In terms of that 76K level, we saw here's a bit, but there's currently only 15 million down there right now. So I don't see that as a strong level of support at the moment. I do think that this is going to get absorbed, and we just saw it shift down a little bit, right? So right before your eyes. So some of this liquidity is getting taken, and it could continue to get taken here, right? We saw a rug pull over the weekend. I say the weekend. My days are completely screwed up, guys, with the holidays. I don't know about yours, but we saw this little rug pull here the other day, and that freaked a lot of people out. And it was a sign that price was going to erode, and it has. So the fact that price erosion is happening, not surprising here, but the fact that there are solid bid ladders coming into place here is at least a positive sign. But as you can see, there's some willing sellers, a lot of willing sellers here in this range, as all the order classes pretty much have been selling. There was a big sell order last night from Purple Whales, who really kicked things off with like a $12 million market order. But look what happens here, right? After this liquidity gets taken out, it gets cleared out. So it would be an easy move to recover. I'm not necessarily sure that's going to happen at the moment. And when you look at this yellow line here, I know that because it's the smaller order class, a lot of people tend to think that that's just retail getting wrecked. And it isn't. Okay. Yes, retail lives in these smaller order classes, no question about it. But there are plenty of times that we see the larger order classes the larger institutions using these smaller order classes to TWAP. Hard to tell if this is a TWAP strategy beginning here. What I look for is extended periods of a steady angle of ascent or descent if they're selling, and high volume or a higher than normal volume of coming out of that order class in a short period of time. And when we switch to absolute CVD, we can see what that volume is. At the moment, it hasn't been going on very long, so it's difficult to tell. But it is a couple of $1,000,000 in a short amount of time. Doesn't seem like a lot, but just trust me when I tell you, and that's not a trust me, bro. The data the data proves it. This doesn't really look like T-whopping just yet because we are seeing some contour in here. But when you do see it, it's pretty prevalent. Let me see if I can find a period of time. Okay, so you see something like this. This was T-wop selling. Looks very smooth here, right? Um, those are the kinds of things that we look for. Not a lot of contour in it, decent amount of volume. That's what I look for when I'm looking for T-whopping. There were periods of it happening here as well with both the yellow and green class. I remember doing an analysis on that. So those are things to keep an eye on. No doubt that we're going to see this price degradation probably continue through tomorrow, as there is year-end profit taking, and it could go beyond. The real question looming is whether or not we get this bounce. Let's see. Anthony's got another comment. Watching SPY make one hell of a recovery. Low was like 584, now pushing 590. Maybe BTC will follow suit. Perhaps. And I do have at least a little bit of confidence, I would say, in the fact that we are seeing a bounce from this channel at the moment, and this level's been tested a lot of times, so that would be strong, right? It's not the 20 to 50-60% correction that I've been looking for, which makes me question whether it will be enough. But this is interesting. Maybe it's a temporary bounce, but we'll just have to watch and see how this plays out. And if we can get a full recovery, back to six-figure Bitcoin, then maybe we pull these two moving averages out of this trajectory that has them headed for a death cross. Now, I want to give you a completely different perspective of the chart here and show you something. Okay, this is a different version. This is XRP, which incidentally bounced or might be bouncing from this $2 mark. Let me go back to candles and look at what's happening here on this chart. This came through a support area, and this is a bit of an unorthodox method, but it's something that we've been playing with. My partner, Fred Schneider, aka Material Scientist, has come up with this. It's pretty brilliant. And it's a great way for people who aren't necessarily experts at technical analysis to draw some lines. And the way that this works, and I'm going to take it to the Bitcoin chart because that's what we're analyzing here at the moment. The way that this works is pretty simple. You draw. So we built this one off of the 2023 trend, right? So this is a yearly trend line, which is drawn from the yearly 2023 yearly open to the 2024 yearly open. And then we copy paste those into quarterlies. So let me expand on this a little bit. And I've drawn a few other lines in here to give you some more insight. I'll explain what those are here in a second. So I do this by using bars so that I can identify where the opens and closes are very easily. Then we copy paste that trend line into the quarterlies so we can get a sense of how the annual trend is performing relative to the quarterly opens and closes. Now, what I have here in this chart includes, so the yellow line is the yearly trend from the 2023 open. And then we go to what is our macro trend that I showed you earlier for for this market since the FTX crash. And now if we go back to candles, we can, and maybe some lower time frames, it's a little bit easier to see what's happening here. So what I don't like is that we're falling through, we've fallen through our prior support, And we don't really have any support until we get down to that 86K level. So in terms of, macro higher time frame trends, we don't have much support until we get to that, at least 87K, potentially 79. And then, of course, we have what here? We have our 76K level, which is where the 21-week moving average is. And then we have some confluence with other trend lines around that 50-day moving average, which is incidentally around 69K, the 2021 top. I really want to stay above this level here, just for the health of this market. Yeah, a trip to this trend line might be interesting, but this is really, I think, would start a cascade if we lost this level here. I think we would just see a nasty cascade that could then take us down to the trend line, which sits at about 55 right now. So that's really a broad view across a bunch of different time frames of how things might be playing out. Anthony's got another comment. Let's see. Wall Street getting ready to mention that a lot of alts seem to be holding up well. Same range. I was just about to talk about that, because if you remember, before we got into this situation where Bitcoin was pulling back from the all-time high, we had pretty serious alt rallies and Bitcoin dominance was falling. So as Bitcoin dominance, had recovered, we peaked here, and now we're seeing this breakdown again on Bitcoin dominance. Maybe as we go lower, maybe, just maybe, we get that alt season, the true alt season that a lot of folks were hoping for. So it's not all bad, right? When one asset, yes, this market tends to move together, but when we get into these kind of transitionary periods or transitory periods, it's a time where, as Bitcoin is pulling back and money is rotating out of Bitcoin, we may be seeing money rotate back into alts. So that gives opportunities to watch, right? Simple as that. I want to take it back to fire charts one more time, and also in terms of the fundamentals that we had spoken of. Going to be interesting to see what's happening here, in terms of ETF flows, because there were several days of outflows, 1, 2, 3, 4 consecutive days before Christmas. Then a nice pump the day after Christmas of inflows. 27th, which was the last trading day, so that was Friday, I guess. Net negative on flow, but BlackRock was net positive. So we've obviously had the weekend, and now going to be interesting to see what's happening today. Are these guys buying as price is dipping, or are they unloading and trying to take some year-end profits here? I think that we could see this volatility continue through the end of the year and potentially into the first week of 2025 as we wait to see how things take shape as the new administration comes in. Now, remember, we had said many months ago, ahead of the election, if Trump won, we would likely see a pump followed by a correction. And likewise, we said if Harris won, we would likely see a dump followed by a correction. And after those corrections, after the dust settled, after the new administration took office, we would likely see Bitcoin return to its prior trajectory. So with that in mind, I will leave you with one parting thought and a wide shot of where we sit in the cycle here, right? Relative to the prior halving cycles, right? In my opinion, we're still quite early, and there's still time for more move to the upside, just as we've seen in the prior cycles. So, yeah, there may be some elements that are different, but the elements that are different, in my opinion, are bullish elements, such as institutional demand, such as a crypto-friendly administration, such as the SEC under a crypto-friendly administration, about to take a different stance and help clarify some of the regulatory issues that have been holding Bitcoin back, and the entire crypto market, for that matter, being held back. So, when in doubt, zoom out. And this is what I'm resting on for now until I see something change, until I start seeing more things break down. I think that this is where we sit. And even though it is hard to watch your portfolio lose value as these corrections take shape or develop, just keep in mind you may not get to buy back in at the price you want if you get shaken out here. So keep that in mind. Got to do what's right for you. If you have conviction that Bitcoin is going to once again clear that 100K threshold and move into new all-time highs in 2025, then well, you might consider taking advantage of these discounts. It's a Bitcoin flash sale, in my opinion, and I'm taking advantage of that, buying some of these levels on the way down if we hit them. So I've already done that once right here, and I will do the same if we make it through to these other levels as well. All right, guys, going to wrap it right there. Hope you have a fantastic end of year. Hope it's been a profitable year for you, and hope that 2025 is going to be even better. Hope you'll stay with me too throughout 2025. Let's make this a great trading year together. Thanks again, guys. Appreciate the comments and support. And as always, hope this data is helping you trade smarter, my friends. Have a great day.